Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. We think we're halfway through this bull market, but that doesn't mean we're halfway through the price rise. You see, prices tend to go parabolic at the end of a bull market. We don't know where that came from, but we're pretty sure that we're in the middle of the bull market based on chain data and a 10-year history that goes back a little further. The sign of a positive turnaround. Invest says that the fact that investors are still interested in Bitcoin exchange-traded funds, EPS, is another sign that the price is going up. The story said that Bitcoin's sharp drop in value did not cause a lot of people to leave spot BTC ETF. As of June 30th, the drop in the spot price of Bitcoin was 17.3% bigger than the change in the flow of BTC ETFs over the previous 30 days. In July, billions of dollars were added to the BTC ETF. CoinShares says that about $2.135 billion poured into the funds in the plan over the weekend. Thomas Farrar, co-founder of crypto data platform Apollo, says that BlackRock's elliott Bitcoin Trust received $1.17 million in new funds on July 18th. This is the 9th day in a row that elliott has received new funds. Global economic data is one thing that could stop Bitcoin from continuing to do well. Invest says that the fact that corporate profits are steadily falling as price power weakens is a sign that the economy is weak. Bitcoin prices could also be hurt by the fact that the now defunct cryptocurrency exchange Mt. Gox has to pay back about $9 billion in Bitcoin to its creditors. Industry experts say that unlike Germany's sudden sell-off, creditors may choose to hold on to BTC, which would lessen the effect on the market as a whole. Very interesting. A lot of people think, okay, the boom since ETFs came out in January. Plus, we had a great turnout. We're in the fight, David vs. Goliath, and we're very happy with where we are. Yes, but not a single big bank. These are called wirehouses, and they include Morgan Stanley, UBS, Wells Fargo, Bank of America, and Maryland. A Bitcoin ETF, not a single one has added Bitcoin to its system yet. All of them are doing what they need to do. And I think one will happen in the next few months. And it might not be the big ones, it could be a separate RIA like LPL. They move a little faster. The other ones will quickly follow once you get one with a spot Bitcoin ETF on its website. The next spur is likely to be the next year, but we don't usually do that during bull markets. The sites that are putting the Bitcoin ETF on it. Yes, I think that will happen this year. Some of our possible clients, the platforms themselves, told us that they would need 6 to 9 months to think about it. Today is the start of the 6th month. So I think that in the autumn, at least one of them will add a Bitcoin ETF to their platform. That, I think, will be the next dream. I remember that it was the last time there were a lot of people. We had the halving and everyone was waiting for a pop, but it didn't happen. To begin with, it didn't happen because a lot of people are looking forward to it. But I've seen it, let's say, gestate, and then all of a sudden, that means they might happen at the same time in the 4th quarter of this year. It might be really cool. If those sites spend an hour with Mike Saylor, I'm sure they'll reach their goals faster. Okay, maybe not. Okay, they don't like taking risks. They don't want to, so they don't. We both think Mike is a great supporter of space. For some reason, that doesn't feel safe. I'd like to think that our studies and the fact that we've written a number of white papers, our first one came out in 2015, have helped. I'd like to think that this methodical way of learning the subject and the enthusiasm of people like Art Laffer for Bitcoin come from his strong belief that the Federal Reserve has effectively managed monetary policy over the years. I guess you could say that we stopped bad things from happening. Before the Federal Reserve was created in 2000, that is, in 1913, prices stayed the same. The economy was very unstable because we used the gold standard. You also experienced booms and busts, but they happened very quickly. They were gone in a week. We led up to a crash in 2008 and 2009 for years. And now we're back to having no interest rates. Also, I'm interested in what will happen when private equity and private credit put huge amounts of money into real estate and then borrowed more to make it bigger. We can already see the effects in the buildings, and the post-COVID with the office family, multifamily now, even in places where there has been a lot of movement. This means that there are too many group homes in the Sun Belt. And so, I think we'll keep having problems, but hopefully nothing like the ones in 2008 and 2009. I don't believe that. Still, you know that using 0% for a long time makes you want to yield, which makes you act badly. The sign of a positive turnaround. Invest says that the fact that investors are still interested in Bitcoin exchange-traded funds EPS is another sign that the price is going up. The story said that the sharp drop in the price of Bitcoin did not cause a lot of people to leave the spot BTC ETF. As of June 30th, the drop in the spot price of Bitcoin was 17.3% bigger than the change in the flow of BTC ETFs over the previous 30 days. Net inflows of billions of dollars have been made into BTC ETF in July. According to CoinShares, about $1.35 billion poured into the funds last week and in June. Blockchain trust BlackRock's Thomas Farrar, co-founder of crypto data platform Apollo, says that elliott received $17 million in new funds on July 18th. This was the 9th day in a row that new funds came in. Global economic data is one thing that could stop Bitcoin from continuing to do well. ARK Invest says that the fact that corporate profits are steadily falling as price power weakens is a sign that the economy is weak. Bitcoin prices could also be hurt by the fact that the now defunct cryptocurrency exchange Mt. Goxy has to pay back about $9 billion in Bitcoin to its creditors. Industry experts say that, unlike